Welcome back. European stocks are down for the sixth day in a row, the longest losing streak since January of 2009. The continent's debt crisis has raised questions as to whether more European countries will in fact need bailouts. Joining us now from London is Daragh Maher. He's Deputy Global Head of FX Strategy for Credit Agricole and Callian. Daragh, good morning to you. I've got to ask because, you know, when we saw the worries about Ireland resurface in the past few weeks, it seems like right now that risk is a little bit mitigated given what we heard from Wenjabal and the appetite for Greece's debt there. Is that just a one-day trade, or is there some real relief?
I think it really ebbs and flows. I mean, that's the difficulty we have here, is that if you've looked at it on paper, things still look pretty grim. Occasionally we get it punctuated with good news lines, you mentioned, like we've had from China today. But the overall overriding picture still is one, in terms of sovereign space, is still a great degree of nervousness. And, you know, I think that's something that isn't going to be resolved quickly. There's no quick fixes here, so it's very hard to see it kind of, if you like, dissipating as a market driver. And I think that's the real problem, both for issuers and for the market in general.
So how much event risk is there, at least for this week?
Well, hopefully not too much for this week. This is one of those terrible weeks where everybody seems to be in a holding pattern ahead of non-farm payrolls in the US on Friday. So, if you like, the eye of the market is kind of drawn away from the sovereign space a little bit, perhaps. And you know, we don't have the refunding of the banks and a few other big issues like that, and we haven't obviously had the Irish banking bill to the fore. So, it should really fade into the background a little bit this week. But you know, it doesn't necessarily mean we get any great directional input, because we do tend to settle into these kind of holding patterns in a key payrolls week.
Right. Well, taking another look at the dollar there, I mean, there's some debate as to whether this expectation of quantitative easing is priced into the market, you know, when we look at treasuries, or when we take a broader market view. When you look at the dollar, is the bet fully priced in that the Federal Reserve will be going out and being more active in the November meeting by increasing purchases?
You know, ironically, a couple of weeks ago, I think I would have got the answer to this quite wrong. I would have said, yes, it's fully priced in. We've had a lot of dollar weakness. You know, it seems to be consistent with what we've seen in the interest rate market. But then, you know, last week we had a couple of comments by Lockhart which said that QE2 wasn't a done deal. You know, and frankly, if the dollar was fully priced for QE2 and we got those kind of comments, you would have expected to see a little bit of a dollar rally on the back of it. You know, oh my goodness, maybe it's not such a certainty. We didn't really get that kind of price reaction in the market, which to my mind points to a currency market that isn't entirely convinced QE2 is going to be delivered. So it's still one that's in the balance, one that's not fully priced in, I would argue.
Quickly, I want to go to the emerging markets. With this news of a runoff in Brazil, Dilma Rousseff still favored, but not a clear majority thus far. Give me a sense of economic policy there and your bets on whether inflation is a worry for Brazil.
I think it's a concern. I think in general, though, you know, the way this currency has been played globally is it's a high yielding, strong growth story, very fashionable, maybe overpopulated, and you know this political kind of wrinkle is causing what I would describe as a hiccup, really, more than a kind of a derailment. And I'm not convinced that, you know, when we come out the other side, that the market's going to feel its needs to reassess Brazil in a big way. I think things like the current account and other issues like that might be a story for later next year. But for now, you know, Brazil, whether they like it or not, seems to be a fashionable choice, and I suspect that remains the case. So
ahead of that end of month runoff, I mean, how much volatility do you expect there?
Quite a bit, and I mean, I think this may be typical of the fourth quarter, you know, in a wider market space. In that, what we tend to get is people jumping on bandwagons, trying to make the money for the year, particularly in October-November period rather than December, and so that I think tends to lead to a bit of overshoot. It tends to lead to heightened volatility, and you know that's one that you don't want to miss out on these moves. And so there tends to be people just jumping on quite early, and that does create a little bit more volatility, as you say.
All right, Daragh, thanks for making time for us this morning.
Cheers.